Hi, Courtney Smith here, and I want to talk about the current currency war. What has happened is that all the major currencies in the world, probably all the currencies in the world, are dedicating themselves to debasing their currency. They're actually trying to set it up so that their currency will be devalued against all other currencies. Well, of course, if all currencies are trying to do this, then there is simply a race to the bottom, a race to zero. So when we say that a currency is getting stronger against another one, what we're really saying is that it is being debased or devalued at a slower rate than other currencies. Governments believe, incorrectly by the way, that by reducing their currency, they will be able to boost economic growth in their country. They believe that the reduction in their currency value will lead to higher exports and therefore higher economic strength, which will, of course, help them get reelected. In actual fact, this is not true. What happens is that there is an impact that exporters do export more goods, but unfortunately, the price of all other goods as a result is increased in the domestic market, which reduces economic strength. So rather than people getting wealthier, they are getting less wealthy. Only the export sector does well in a currency devaluation regime. All other sectors of society do worse. So it's a false idea. Nonetheless, this is the common idea that politicians do. So all we're seeing is a race to the bottom, a race to zero. Now the question is, how can we make money from this? And where we need to focus is on areas that will hold up well when currencies are being devalued. I've got a chart here of the euro versus the US dollar, and this is a weekly chart, so it shows back about 2 years of data. This is the last 2 years. So you can see the euro has been gaining on the dollar here recently, and there's a good chance that that will continue to exist. But this is not the ideal place to look at. A much better place to look at would be over in the Swiss franc. The Swiss franc is really concerned more than anything about their relationship with the euro, not against the US dollar. And as a result, what's happened is we've seen a tremendous bear market in the US dollar versus the Swiss. In other words, the Swiss has been very strong. The Swiss do care about the relationship with the dollar, but they care much more against the relationship with the euro. So here's the dollar, and as you can see, the dollar has been in a tremendous bear market, making new lows here on the market. And so the Swiss is going to be a place, the Euro Swiss is going to be a good place to be. This is Euro versus Swiss, which has shown some stability recently, but basically be long the Swiss against anything. Another critical, and perhaps another currency play is the Chinese Yuan. The Chinese are suffering from a bubble in the housing market. They're very concerned about inflation. There's also some political pressure, so I look for the Chinese Yuan to move up slowly. It's going to be a managed increase. It's hard to trade, so it's not going to be the best trade to be in. However, what will be very, very good is the gold market. Here's a chart of the last 2 years in the gold market. And as you can see, we're making new all-time highs. The gold market has become a currency again. This is the preferred safe haven against the degradation of all other currencies. It's also a hedge against the inflation that is inevitable when currencies are degraded. And that's exactly what we're seeing. Silver will do well, not as well as gold, I think because it's more of an industrial metal, but we should see gold do extremely well. So to make money on the current currency war, buy gold, buy Swiss franc. Thanks very much.